So we were supposed to do another question on segmental report. I remember I left you with a pilot paper question. Pilot paper question, that is December 2021. So kindly, let's check the pilot paper, December 2021. Question number 3. December 2021, there is the real sitting and there is the pilot. So make sure we are on the pilot. Which page, somebody? Which page can we check to avoid wasting time? Whoever's gotten it, which page can we refer to? Page 38. Thank you. So I hope everyone is there. Allow me to read. It says, Mtangazaji Limited operates in Kenya and in other East African countries. Okay. The company has 2 operating segments, print and TV/radio. The following details apply for the year ended 30th June 2021. So there is revenue, print, TV/radio. So this TV/radio, these are the segments. The TV and the radio, these are the segments. Then we have been given the cost of sales. There is depreciation, there is amortization, impairment of receivables, other operating costs. Then we have finance costs, we have finance income, share of results of associates, we have current assets, we have non-current assets, we have investment in associates, we have current liabilities, non-current liabilities, then there is capital expenditure. Correct. So required, as far as the information permits, prepare the segmental report showing the results of each segment and for each combined entity. So what you do, you write there, mtangazaji. Mtangazaji Limited, segmental report. Segmental reports for the year ended 30th June 2021. This one seems to belong to my board. I think about it, it looks very wise. So you will have here the fragments. So you leave a space here. So you will have print, you will have TV, talk radio, then you will say adjustments, then combined is the consolidated. But for shillings are in millions. All right, we can start. We can start. So you start with revenue. You start with revenue. So revenue, in this question, they just said revenue. You know, revenue, we pick the two. We go for the internal and external. So internal is the intersegment revenue. So we normally go for intersegment revenue and the external revenue to get the total. But in this case, they just said revenue. So this one we assume that revenue is the total. That is the total revenue. So right there, total revenue, total revenue. So total revenue, we have 109,558. 109,558. Then we have 26,698. There is no intersegment, so nothing to just or eliminate. So you take that plus that, then we get the consolidated. So consolidated will be how much? When you add the two, what do you get? You get, Joy? 136, 256. 136, 256. Thank you. Then we go to profit. We go to profits, the segment profits. So for segment profit, there is, you're supposed to start with the operating. So operating profits, In this question, we were not given profit elements. It was not provided. So in that case, what will happen? You will take revenue, you subtract the cost of sales. Sorry. So you will consider revenue minus cost of sales to get the profits. So have it as a working somewhere. So you will say operating profit is equals to revenue. So you take the total revenue minus the COS. COS is the cost of sales. So you will take for print. For print will be the 109,558 minus the cost of sales. So cost of sales for print is 16,908. Then the TV stock radio is 26,698 minus the cost of sales, which is 6052. Give me the two answers. So where you don't have the profit, just take the revenue minus the cost of sales. I can see answers. 92,650. So bring it here. 92,650. Then the other one is 20,946. Give us the total consolidated. So you add the two. You add the two. Here, 113, 596. Then there is operating. Operating, I saw it somewhere. There was other operating costs. There is other operating costs. Please check. Somewhere there. So other operating costs. So other operating costs you must subtract from the operating profit. So Professor says TV profit should be 646. I hope then that does not change the total. Total is 113,296. Okay. Thank you. Other operating costs. Other operating costs. Check how it has been arranged in the question. Check it keenly, please. Other operating costs, we have print, TV, then there is unallocated. If you check, there are three. There is other operating cost for print, TV, then unallocated. So in that case, it means there are two. The ones which are relating to the segment are called identifiable. Identifiable, then they're allocated. Now you bring it separately, just as an allocated. So you say here, you can underline this, then you say identifiable, then unallocated. There are two of them. Identifiable are the ones which are specific to the segment. So for print, I hope, please check keenly, this figure is 72. So this is 72, 598. Remember to subtract. Then TV 16, 160. Then you will give me the total. Then unallocated, you take it to the consolidated straight. So unallocated is 10,802. 10,802. You take them to the far end. Add for me these two. So the total, I'm being given a figure of 758. But, oh, sorry, this one was supposed to be closed off. I don't know why we did not close. The total revenue, just give it bottom single line, this one here. You are supposed to close it there. Maybe the last one is the one you can give double the total at the end. So that was supposed to be closed. Then you bring other items. So other items are income or expenses, but the ones which are cash income or cash expenses. So you bring them here. Non-cash expenses like depreciation, amortization, you don't bring them in the operating profit. You only bring the cash expenses. So you come here and say other items. So other items, I saw them here. There is finance costs. There is finance costs. There is finance income. And there is share of results of associates. Those three, you have to bring them. So finance cost, we have a book confirm it is 774, or the figures are not, but I hope it is the one. 774. So finance cost you will subtract. Then we have 66. Tell me the total. The end. 774 plus that. 0, 4, 8. 840. Confirm. 840. You subtract. Then finance income. Finance income. They have said it is unallocated. Anything unallocated goes to consolidated, the combined. So finance income, unallocated, we have been given 4064. So that is an income you add. The income you add. Then share of results of associates. So associates results. Associate result. It is only one, meaning it is unallocated to the far end, 1042. Associate result, 1042. Correct. So only that, there is nothing else. You don't bring non-cash. These are cash, income, and expenditure. Non-cash like amortization, depreciation, impairment, we are going to disclose them separately. So we are not required to subtract them here. We only check the cash transactions. So now you close this. You close that. So you add them vertically, 92,650 there. Then you close bottom single line, bottom single line. Then you call it profit before tax. Now that is the profit before tax. So have it here, profit before tax. I want the three figures just to confirm whether we are okay. So from 92,650 minus this, this minus that, that. Remember to add the consolidated, the last two. Remember to add the last two, the finance income and associates results. Can you give me the three answers just to check whether we are together? Then we go now to segment assets. So someone with the three answers, then one person will just confirm, then we proceed. Nancy. So I don't have space. Someone will just confirm. Just one person can confirm Nancy's answers if you have the same. 19, 278, 31, 118, 154, 258. Can someone confirm Nancy's figures? Then we are good to go. Or you have a different answer? Lynn, 19,278 corresponds. Ya katikati, unaona watu wanapeana 4420, 18002. Nancy, hebu recompute hapo ya katikati. 20 minus 16 lazima ikuwe 4,000. Yeah, lazima ikuwe 4,000. Yeah. So, yeah, many people are confirming that. Hii lazima ikuwe chini. So that is okay. From there, we go to segment assets. So allow me to delete from profit, actually from here, from revenue. Though you proceed, and just lack space. Mumbai is even having 4470, hapo katikati. 4420, 4470. So you proceed after here down there, you proceed now with the segment assets, but I want to delete from here because of lack of space. So have there segment assets. So segment assets. Segment assets. So you will first of all bring the identifiable. You bring the identifiable, then unallocated, like that. Identifiable and unallocated. So let's check our arrangement. Let's check our arrangement. In our arrangement, check the arrangement. There is current assets, and there is non-current. So current, there is print TV, non-current print TV, then unallocated for each, for both current and non-current. So what you will do, again, have a working outside there. Have a working outside there. For segment assets. So segment assets, you will have print TV, print and TV. So current assets and non-current assets, those two. The assets must be a one figure. So add non-current and current, the identifiable first. So current, I'm seeing, well, I hope it is 34,620, 34,620, and TV, 34,620 and TV to be 32,580, 32,580. Then non-current to be 43,760, 43,760. Then TV to be 71,62, 71,62. If you are satisfied with those figures, your figures, I might mess up. If you're okay with them, then please add for me. But by extension, due to save on time, let's even get the unallocated. So put here unallocated. Yes, to save on time, unallocated. But now, if unallocated, will it make sense? Current, non-current. Current, non-current, then total. Yes, yeah, it will make sense. So current, undercurrent, unallocated. Unallocated undercurrent is 71,940. 71,940. Then non-current is 15 to 40. 15 to 40. Correct. So can you give me the three answers? Give me the three answers. Thank you, Vera. You're confirmed. So 78,380. So me that like I do direct 78,380. 78,380 for TV. 39,742. 39,742. Nothing to adjust. Then for unallocated 87,180. 87,180. What is the total for the identifiable? 78 plus 39. 78 plus 39. What do you get? Total? Total massive? 118, 112, 118, 122. 122. So now, your total assets, the total assets. So don't bother with these ones. There is no need of dropping these ones down. Just give me the total at the end. So total 205, 302. 205, 302. Let's go to segment liabilities. So segment liabilities. There is a handout for group accounting. We are starting our group accounting in the next class, that is on Saturday in the morning. So please print, staki musumbuke, bara go online, board, nini, just print it, have it on your table, so that, because we will discuss it into details. I've never given a handout before for group, but because actually this semester is shorter compared to the first and the other one. This one is very short. So I thought it wise to have those notes, then we go through, because writing them will take our time. So please just print. If you can't print, then kama huwezi print na uko karibu na shule today and tomorrow, you can pass and pick a copy. Alright. But the way I know you people, you will print. So identifiable, then unallocated. This thing is not hard, it is just wasting our time. So I want to give you work. Mnanifanyia sasa hivi obie. Please, kuna kitu tujaleta. Wait. We have messed somewhere, but at least nimeiona mapema. So we have to do some adjustments. Apart from total assets, there is something we have not captured. There is investment in associates. Investment, check it. Investment in associates. If you are seeing it, it is how much? Investment in associates, that is an asset which must be combined to get the total. How much are you seeing? It is somewhere there. Investment in associates. How much are you seeing? The investment in associates, where 29,708. Investment in associates, 29,708. 29,708. So to get the total assets, that one must be considered. So total assets will go up. So 205 plus 29, 235, 010, 235, 010. Thank you. So that one must be captured there. Then now we are going to segment liabilities. Segment liabilities. Now, hizo classes tunaanza 5:30. I recommend kila mtu at least ukue, but I don't know, people are different. There are people who cannot eat in the morning, but kama mtu angekuwa na juice hapo ama soda ama uji ama chai, is better. Hizo class naanza 5:30 mpaka around 9. Itafika mahali huwezi concentrate. So if you know that was your challenge, ukue nayo ndio njaa isifanye usikose concentration. So segment liabilities, you will give me identifiable, then unallocated. For liabilities, there are only those two. So I want you to do for me that work. For the liabilities also, the same way as assets, there is both current and non-current. Print TV unallocated, print TV unallocated. So to move uniformly, let's start with identifiable. So I want you to add for me, identifiable is current plus non-current. So can you give me the current plus non-current for print, for TV, then total. Let's finish with that one first. So you are the current and non-current. The way we did our assets, current and non-current for print, current and non-current for TV, then the total. Give me those three, then we check when allocated. And Fania here. You give me the answers as a set, the three of them. So kindly confirm some, Mercy's act has been confirmed by three people. 18408, 18408, 5544, then 8840. Then unallocated, you just add the two for current and non-current, then we get it at the end. So just, that is a single figure. So can you add the two for the current and non-current unallocated? The unallocated liabilities. Someone with a figure there. Unallocated to further 88. Oh, it can't be 8840. 8840 was for unallocated. Oh, thank you. So total for the identifiable was 68. 68,908 or 68,912. Because Mercy and Vera have different answers. So that must be confirmed. 68,912. So confirm Mercy. Okay. 68,912. So our total liabilities. Just give me the total at the far end, this one here. 68 plus 8840 will be how much? 77,752. 77,752. Fine. I proceed. So segment assets, segment liabilities. You go to non-cash expenses. That must be disclosed separately. So you proceed down there. I'm deleting this. Non-cash expenses. Non-cash expenses. Non-cash expenses. I hope everyone is done with this. So non-cash expenses. Non-cash expenses, there was depreciation, amortization, and impairment. Those three. So there was depreciation, amortization, and impairment. Yeah, like that. Wataleta swali kama hii siku moja. They will bring such question one day. So depreciation, TV, radio, what? Those are negative. It is 9292. 1, 2. Yeah, 9292. So this is 9292. Then 2702. Then amortization 942. 182. Then impairment 1496. Then 990. So this one here, you can add the total non-cash expenses. You can give them the totals there. Because after you question marks or other mark, they only mark the entries, but you have to finish. So please do your mark. I believe maybe you are done. So you bring here capital expenditure. This question had everything. Because I feel like it full blast here, segmental. Mostly segmental ends at liabilities, but this one had everything. So identifiable is the last one, 35, 32, 11, 38. It ends there. Yeah, complete that. Then we check what next. So I hope you are done. I hope you are done. If yes, then we go to Roman 2 of the question. We go to Roman 2 of the question. In Roman 2, they are saying, highlight areas that Mtangazaji Limited needs to improve in segmental reporting to comply with IFRS 8 segmental reports. So write down there, areas to improve in segmental reporting. Areas to improve. I'm going to get areas to improve. Areas to improve. So the answers are not standardized. It's just, you just try to think outside the box, then give them. So one, what happens, which I told you, the threshold for reporting on a segment, the assets, revenue, and profit must be at least 10%. Then the ones which have not met the 10% threshold should be aggregated together. The aggregation is the combination. So the management, let me call it the management of Mtangazaji, they have not told us the ones which were aggregated. Once you've given us a segmental report, you need to tell us as a disclosure down there that this TV and what, like here I'm seeing TV stroke radio. I'm trying to think that these ones might have been aggregated, maybe. So you need to disclose that this segment and this segment were not meeting the 10% threshold, and therefore they were aggregated together. So that disclosure should be made to the management. So that is one of the things which I've noted, which they have not brought in the picture. Then something else which they need to be very keen on is the separation of corporate amounts. The corporate amounts and the unallocated, which I think they have tried to show the unallocated and no, they have not. The unallocated and the corporate are different. Those are totally different things, because unallocated, it means they can be used by any segment. The way I was telling you the other day, in the office, you can have a printer Apple in a certain highway office, and it can be used by that. What we're marketing on a print Apple, accounts on a print Apple, HR on a print Apple. So that is unallocated. But corporate assets, they are not to be used by any of the segments. Rather, they just belong to the main. Mostly they are called even the HQ assets. So that one also you need to bring the separation. Let's write. At least you have understood what I'm trying to bring in the picture. The management, tunaandika number 1. The management should disclose. The management should disclose the judgments. Should disclose the judgments. Should disclose the judgments in applying. The judgments in applying the aggregation, applying the aggregation criteria. The aggregation criteria. The keyword is just the aggregation. So how did they aggregate the two? That one is something which they need to tell us. Then number 2, disclosure on corporate. Disclosure on corporate amounts. Corporate amounts from unallocated amounts. Corporate amounts. Next, explanation on the identification of reportable segments. reportable segments. Reportable segments. Reportable segments. Number next. Explanation on how consolidated amounts. Explanation on how the consolidated amounts relates to the financial statements. Relates to the financial statements. Because whatever is here should be in the P&L and the balance sheet. So that one you need to, and that one is achieved through reconciliation. You reconcile. Those are the ones I'm able to bring up. So there is a handout I'm sharing. There is a question. In exam with the knowledge you have, the question we did on this one, it will be okay. But there's a question, I'm afraid, it can bring a problem. So just give me seconds. I share it in the group, then we can be able to do. Yeah, I'll share. Please open that handout. I'll share that handout. Kindly open. Then you can peruse the questions, but we are going to the last question in that handout, the very last. We are checking the last question, that handout. So allow me to go to the very last. I think this one for June 2011. The one for June 2011, I'm going to share with you the solution. Then this one for June 2012, but I'll tell you something on how to work about it. Then the June 2013, which is question 1, is a version of the one we want to do. The one we want to do, I consider it to have a certain aspect, which once you understand your number 1, it's quite easy. So number 1 and the last one are related. Then the remaining 2, I'm going to give you solution for 1. The other one I know is easy, but I'll tell you how to go about it. So no worries. All right, so the last one there, allow me to read that one. TICAS Limited is preparing a segmental report for inclusion in its financial accounts for the year ended 31st December 2008. The figures given relates to TICAS Limited and its subsidiaries, but information in relation to associated company is not shown. Sour. So 2008 and 2007, we have those 2 years. Maybe we can just check a few. Sales to customers outside the group by the stationery division. Then we have sales to customers outside the group by the UK companies. Sales not derived from stationery, tissue, or packaging activities. Hivyo tu. Yes, just like that. Nothing very serious. So required down there, draft an industry and geographical segments report for inclusion in the annual report to give the maximum information to the shareholders. Then discuss items using the TICAS Public Limited Company figures as illustrations where you consider there is need for further information to assist the reader to interpret the segmental data. That one is more or less with the one we have given you in the previous question we have done. So we are concentrating only on the industry and geographical segments. So here we are giving 2 reports. We are going to give the industry and geographical. So when you check it keenly, check uko chini, the last two issues there is segment net profits by industry. So industry, we are going to report on stationery, tissue, and packaging, those 3. Then geographical is UK, US, and other areas, those 3. Those are the geographical. So we are going to have 2 segmental reports. The one reporting on the industry, then another one which we are going to report on geographical. So right there, now again, why I selected this question, where the question started, check where the narration started, the question itself. They said, TICAS Limited is preparing a segmental report for inclusion in its financial account for the year ended 31st December 2008. However, in the schedule down there, we have been given 2 financial years. We have been given 2008 and we have been given 2007. So 2007 will not be used anywhere. That is, I don't know, it was just to make the question look more serious. So 2007 is irrelevant, completely irrelevant, meaning it is not going to be used. And that's why I said usually a Jew is like this one, but now they only had 1 year. So it will be very wrong for me to do one with 1 year, then when you part these 2 years. So when preparing the segmental report, you check the year in which they want to include it in the financial reports. So if they say they wanted to include for the year ended 31st December 2007, then in our segmental report, we only concentrate on the 2007 figures. That is very important for us. So we are only going to concentrate with the 2008 figures. 2007 silent from beginning to the end. We are not going to use it. So they were just trying to play up with our head to know that segmental report is annual based. So it is year based. You only provide for the year under consideration. So the year under consideration is 2008. So we are only providing for 2008. So right there, Tickers Limited. Industrial segmental reports for the year ended 31st December 2008. So industrial, we are going to have stationery, billings are in thousands. We have tissue, the same. Packaging, adjustments, then consolidated. Good. Have that, students? Then we kick off. I hope you are done. So we start with revenue. So segment revenue. So segment revenue. Was called sales. Huh? They used the word sales, so no problem. So you'll give us external sales, then intersegment sales, and unallocated sales. I saw it somewhere. Unallocated sales. There are those three. So we have a long journey to identify them. So sales to customers outside the group by stationery. That is is external. Outside the group, that is external by stationary. So you bring it here, 11,759. We are not touching 207. We don't want, that one is not for the inclusion in the books. Don't think I need much light. All right, so that is that. Then the next one, sales to customers outside the group by the UK. UK is geographical. So UK will go to geographical. Sales not derived from stationery, tissue, or packaging activities. That is unallocated. It is not derived from stationery, tissue, or packaging. That is unallocated sales, 3290. 3290. That is unallocated. We proceed. Because yapa bure kabisa. Next, sales made to customers outside the group by tissue division, outside the group. So that one is here, external, 18,390. Okay. Assets used by US assets, no assets, no. Sales, there is sales down there. Sales by the tissue division. Sales by the tissue division to other group members. Other group members is intersegment here. Confirm if it is the 3658. 3658. If so, then we proceed. Assets, no. Sales by the stationery division to other group members. 1227. Stationery. Yes, 1227 here. Correct. We are moving on. Then sales not allocated to UK, no. Sales made by group to other areas of the world. Other areas of the world takogo kwa geographical. So leave that one alone. Then expenses, no. Sales to customers outside the group US, no. Expenses not allocated to stationery, leave it alone. Sales by US, no. Sales to customers outside the group for bureau services, packaging, 52. Outside the group, 52. Ni kitu rahisi ni venye tu wanatusumbua na maneno mingi hapo. Sales UK, we are done with sales. There is no intersegment sales for packaging. You can peruse. If you get any, allow me to know, please. But so far, I've not seen intersegment for packaging. So what you're going to do, add for me external here. Then intersegment, you add, but you don't take it to consolidated. Intersegment does not go to consolidated, we eliminate it. So you add this plus this, but you subtract it at this stage. You subtract it at that stage. Yeah. So that will be our total sales. Our total sales. So you will confirm my figures because it will need to waste time. Just confirm my figures. So this is 11,759 plus 18,390 plus 5,200. 35,349. Then we are eliminating 1227 plus 3658. So we are eliminating 4885. So this is 4885 to be eliminated. So 11,759 plus 1227 is 12,986, 18,390 plus 36,58 is 22,048. This is 52. Then 35,349, 32,90, 38, 639. I will only want one person to confirm if my figures are okay. Confirm. Nancy has confirmed. So, Mr. can you finish? Then we go to the segment profits. I hope you are done. So if you are, then we go to segment profits. Segment profits, the second last down there, the second last, there is segment net operating profit by industry. Check down there. So operating profit, segment operating profit by industry. So we have for stationery 24, 42, 59, 16, 8, 21. So please, what I want you to do for me, add the 3, but don't post. Just tell me the answer. Don't post that answer. There is something. Don't post. Just add and give me the figure. I'll tell you what is happening. Add the 3. This plus this plus this. Nancy's getting 91.79. 91.79. Then examiner down there where we have picked these figures, the examiner is saying consolidated. Please check the consolidated segment net operating profit. They are giving 89.78. So their consolidated is 89.78, while we are getting 91.79. So you have this plus this is 91. But with them, they are saying it is the consolidated is 89. So the difference, the drop, the difference means there was intersegment profits. So that is what they were not giving us, which will be eliminated here. So get the difference between what you got, this plus this is 91, subtract this to get the intersegment. That is what they wanted us to come up with. So can you get for me that figure? The difference, which is the intersegment profit, 201. So this is 201. Then I came across unallocated expenses. Please check, and I want you to tell me the answer so that I confirm we are together. Check the expenses not allocated to stationery, tissue, or packaging. You tell me the answer. So this one I can even close up to that end. Then you say unallocated expenses. unallocated expenses. How much are you seeing? The unallocated expenses for stationery, tissue, packaging. It is how much? Vera, 5004, yes. So 5004, you subtract. Therefore, you are correct, profit before tax. There was no finance cost and the rest. So you just do that. $39.74. And then let's go to segment assets. Let's go to segment assets. Our liabilities. So the assets in Asia, they don't have liabilities. It ends there. It ends at the assets. So segment assets. So segment asset, identifiable and unallocated. Allocated. So your cousin is stress. So identifiable, if you start checking for your assets, you will realize from top we have assets US, no? Assets not available to be allocated to stationery, tissue, and packaging. Union unallocated. And I hope the figure is 14,856. That is unallocated. 14,856. We collect these other ones. Assets used by the stationery, 31,750. 31,750. Sales, no. Assets used by packaging. Packaging, 17,775. 17,775. I'm looking for now tissue. Assets, tissue mkwaki. Assets used by tissue division, confirm 44,20. So that one ends there. And this one will give us the total assets. They don't have liabilities. So that one ends at that stage. So maybe you can just add 31,750 plus 44,620 plus 17,775. 94,145 plus 14,856. 109,001. Finished. In fact, that's a funny geographical. I'm just going to tell you what to do. I just wanted you to know how to approach that kind of a question. Otherwise, it is very easy. So the first question in that handout is the same, though inaongelea mambo ya sijui ni. It's talking about blending, mixing, and packaging, but the same thing. The same thing. The reason why I did not want to do it, it only has 1 year, but this one was having 2 years. So I picked this because of the 2-year issue, so that we only concentrate on the year when the financials are being presented. So it means if you can do this, you don't have any problem with that one up there. So now, I want you to do the one for geographical segmental report. So geographical, I've seen UK. There are 3. There is UK, US, and other areas of the world. So you will have them here: UK, US, other areas, adjustment, consolidated. So of course, revenue, you just check the way we have analyzed this. That one I know you can do 100%. Then their operating profit also is the last item there. They have been given, then they have given us consolidated. So you add those operating profits, you will get a different answer with consolidated. The difference is the intersegment which you eliminate. Then the rest are just the same. So allow me, allow me just to stop segment at that stage. At least you have a very good idea. I'm sure you cannot fail to get something like 85–90% on segment. That is enough. That is enough for you. So our next topic when we meet is group accounts, stock consolidation, stock business combination. Saturday, 5:30 AM. It's Saturday, good. Yes, Saturday, 5:30 AM. That's all the vizuri. 5:30 AM. Sunday again, 5:30 AM. Sunday again in the evening. After group, is there any other topic? Well, hiyo imeulizwa na nani? Wacha nione nani anauliza. Brian. Yes, after group, kuna earnings per share, EPS. There is reconstruction. Those actually the key topics hapa inakuanga group, EPS, and reconstruction. The beauty, EPS tunafanyanga na maximum 8 hours, but we can always compress it even to 6 hours. So it's not wide. That one is only 3–4 classes maximum of 2 hours, 2 hours. Then reconstruction, the same, not very wide. The one which is wide is this one. So those ones, no problem. Then I will again take you, apart from those 2, EPS, reconstruction, and this one, there is the share-based. Share-based we can do in 1 class. Then there is the employee benefits, deferred tax to deferred. Share-based employee benefits, then IFRS 17, the new standard in accounting, insurance, then everything is done. So Brian, go ahead and maybe I will finish. Don't worry. So thank you. Have a nice day.